Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So a down day today, perhaps due to Caterpillar earnings. Caterpillar had a 12% swing from the high of the day to the low of the day. We saw Google do similar actions, bullish initially last night after hours, bearish dump today. Tech sectors got crushed. Facebook, Amazon, those names in anticipation of potential lackluster reaction to earnings for those names as well. We had the 10-year Treasury yield break above 3% for the first time in 4 years or so. And that's definitely having an impact. So we saw a big red day. But that does not change what I'm looking for and what has been a great guide for the last couple months on this weekly time frame for SPY, which is looking for a higher low compared to 254.67. We are on our fourth red day in a row. The short-term oversold RSI levels will get extreme if we drop down to the 260, upper 250s levels this week. And that will have us looking for that higher low entry and a bottom fishing play to play with that support. So the weekly time frame, it's been a great guide. We got that lower high with the gap fill target at 270.19. Ended up getting just around that area and started pulling back. So we will still look for a higher low. We have the weekly 50-week support, the lower Bollinger Bands there. And again, the fact that we've already pulled back this hard in the last 4 days means that if we continue this week and get approach that support level, we should see a bounce, an oversold bounce from that level. In my opinion, this overall pattern is likely to break bearish, longer term pattern here, but I do think we have a bounce first, and I do think that break has to wait until mid-May in order to follow through, mid-May or late May. IWM is so much stronger and holding up so much better. Look at the lower wick off of that support band we pointed out in the last video, right off of those levels in a solid bounce, and we're not close to breaking support. And we could pull back significantly and still be above the higher low here. 147.18 is that level that needs to hold. Same pattern, higher lows, lower highs, but not as close to breaking support as SPY is. And SPY could be a potentially a heads-up signal where if SPY were to break bearish and IWM is still holding on, then we could look for IWM to be a potential bearish laggard. But again, I don't anticipate SPY breaking that support this week. QQQ, same thing, pulling back. 4 red days in a row. Bulls must hold 153.88. And if we do see a bear break on these weekly equilibrium patterns, and for QQQ, it's a head and shoulders pattern, not an equilibrium, because we did get that new all-time high. If we see it break, it's going to happen with QQQ first, SPY second, and IWM third, in my opinion. So I would be watching QQQ first. If we can hold 153.88 to maintain that weekly higher low, that's a good sign for the bulls overall. And that would just have us stay in this tightening pattern. If not, if we do break bearish and confirm this reversal pattern, I do believe that SPY will shortly follow and break QQQ. So we do need to be, or I should say, break the higher lows. So we do need to be watching overall how QQQ is interacting with this previous support from early April. VIX, bull move today. So I was pointing out how it was a potential bear flag, but no longer the case, getting over exponential resistance. Big move today, and a new resistance level rejecting from the moving averages. 1966 is where we topped out, and the bulls just need to turn around this weekly trend because we have our high, low, lower high, and we're looking for the bulls to form the higher low. Bullish reversal hammer from last week, trying to follow through this week. Bulls want to close as close to 19 plus as possible to confirm this candlestick and be looking to head back up to set a lower high in the $22 range. So just the opposite pattern, but a same tightening equilibrium to be watching on VIX compared to the other names. So that's where we stand. QQQ is going to be important. Facebook earnings tomorrow, Amazon earnings Thursday is going to dictate what QQQ does this week. And I do believe support will hold and will stay in this tightening pattern for now. I appreciate you watching, and we'll continue to check back in. Have a good rest of your night.